Yo, what's going on, everybody? It's Ryan Trades, aka Ryan FX, here back with another video. We're gonna be talking about something very, very important, and that is trading psychology. It kind of flies over people's head. Some people think that they're bad traders, and which they're really not. They have a good bulletproof strategy. They just don't know how to execute that, and they don't know how to call it a day. So let's get into it. Let's talk about trading psychology. So this is a this could be a very long video. This could be an hour long because there's just so much to talk about on trading psychology. But we're just gonna cover the bare minimum, just the basics. So without further ado, let's get into that. So when you get into a trade, make sure that you set your stop loss accordingly. All right, so that's step number one. Step number two is stick with your stop loss. All right. Don't don't get in there and be like, okay, I'm gonna place my stop loss right here at the lows, right? At these lows right here. All right. Don't be like, okay, and then price starts to do its thing, whatever, and starts coming down. But you're like, okay, like I don't want to get stop lossed out. Like I'm gonna move it down to these instead. Move it down to these lows, and it just keeps going down, keeps going down. So just broke through here, broke those. Now you're like, okay, well now it's coming from my other stop loss, and just keep moving that, and then you blow your account, and then you think it's your fault. Yeah, it is your fault, but you have to learn to accept it and to move on. You can't be too emotional with your trades. You can't think that trading is how should I put it, like that you're going to be a successful trader overnight. It's not going to happen. It's definitely not going to happen. I can guarantee you that. But if you take your time and do it right, then you'll be okay. You'll be totally fine. And of course, when you're demo trading at first, your mentality is a lot different because you're demo trading. It's not your real money. But once you start putting in your real money, you're scared. You think about trades differently, which is normal. That's normal. But if you're scared of losing money when trading, then that's not the profession that you should be trying to achieve or trying to go for. You need to go into trading being like, okay, well, I'm gonna put $100 in this trade, or $1,000, or $10,000 in this trade, and if it goes south, I'm okay with it. If it goes bad, I'm okay with it. All right, walk away, just finish your day, take a bad loss, you're finished. All right, some people need to hear this because they are playing with fire. All right, they're playing with their funds that are really important to them, and let's say they're playing with their last $30 or their last $100, and they're like, okay, well, this is the last $100 I have in my account, so I'm gonna try and trade and maybe flip it, and then I'm gonna make it back. I'm gonna make everything back that I lost. At that point, it's gambling. I don't like to say trading is gambling, but if you make it a gamble, then what's the difference in you going to a casino throwing it on red, or then you going onto XAU USD, going on to gold and throwing in cells with no idea, no analysis, no nothing. You're just throwing all your money into cells. What's the difference? There is no difference. I hate to admit that. I hate to side with the people that say trading is gambling, but if you make it a gamble, then yes, this market is a casino. It's all the way that you think about it, the way that you trade, and this is definitely a difficult cycle to break. I won't lie, it is a difficult cycle to break, because it's your own mentality. You're fighting yourself to fix the way that you think. That's not an easy task. But what I would recommend is, if you are in desperate need of money, like it's a life or death situation, or like you really need it, then you can't. Then I don't recommend trading. I don't think it's for you. I think that maybe it will be for you later, once you have money that you can basically throw in a fire and be okay with. But if you can't take your money and go burn it, then I don't think trading's for you. If you could take $100 and throw it away, then I think you can once you're done demo trading, open up your brokerage account, throw $100 in, try and see what you could do. If you're getting good with it, you proper risk management, your psychology's good, your strategy's bulletproof, go ahead, man. Throw in some more money. Just keep going. Keep flipping it. It's a grind, but psychology is so important. And I don't want people to feel discouraged, especially with prop firms. I see this all the time, and it ruins people when they fail their accounts. It ruins people. Look, I've passed multiple prop firm challenges. They're simple once you have the it is what it is mindset. You need to, because what these prop firms are doing, and I think it's very, very smart. I think it's the smartest thing out there. They're designed to make you lose, okay? Especially for you, if you're trading below, if you were trading before on a prop firm, on your own brokerage account, let's say you're trading futures, you have $10,000 in your portfolio, and now you're going to go trade futures with 75K. You've never managed 75K. How are you supposed to know? How are you supposed to know the exact everything on a 75K account? I personally think that that it's smart that prop firms do that, because you've never traded with 75K in capital. If you've done it on demos and you practice for it, that's what I did. I was demo trading with 75K before I took my 75K valuation. I demo traded 100K before I went for my 100K eval. And that helped me pass because now I understood how to trade with a bigger account size, and it's easy. It's easy from there. So prop firms also have many rules that are meant for you to lose, such as Apex Trader Funding. After you do your first payout, it is going to be it's going to be very difficult to not blow your account. That's all I'm going to say. It's just going to be difficult. I love Apex, great prop firm. Definitely one of the leading futures prop firms. It's easy to pass their challenges if you know what you're doing. But it's easy to pass any challenge if you have a good strategy, you have good psychology. It's easy. So yeah, I just think it's very smart that they put you in a different realm, basically, to start trading with this large capital that you've never done before. So yeah, people aren't used to that. They fail. And then once they fail, then they start thinking it's their fault. And yes, it is your fault, but you can't beat yourself up over it. Instead of saying, oh, like it's my fault, like I can't do this anymore, I failed twice, I failed 3 times, it's not going to work, you can't say that. You have to go back, redo whatever you think is your problem, look back at it, be like, okay, was it my strategy? Was it that I wasn't placing my stop losses in the right positions? Am I getting taken out before the move happens in my favor? Are my entries in a reasonable zone? Like, what's going on? Like, am I not having a high enough take profit level? Is my risk to reward ratio too low? And start looking over that. Once you find the problem, hop on a demo account, fix the problem, take another challenge, and not care about it. All right, forget about the one that you failed. Forget that because you're not a failure, because you have to fail to win. You have to fail to win. You also need to know that prop firms are out there to get you. They make money off you failing your tests. So you also have to think that the odds are not in your favor. And once you understand that, it'll be a lot easier. And you're going to find ways to outsmart them, or just ways to become a better trader. And I think that's just super important for you, especially for prop firms. And your own capital. I mean, really, you just have to be very careful and understand what the problem is. And once something happens, it is what it is. You can't go back in time and you can't change it. Okay? So if you fail an evaluation, don't beat yourself up. If you blew your personal account, don't beat yourself up. It's okay. It's okay, because if you put the money into your brokerage account that you said that you could set fire to and not care, then you shouldn't care. You should say, it is what it is. It happened. I'm going to go work on my strategy. We're going to make it better, and we're going to come back, and we're going to have a successful month. We're going to have a successful rest of my trading career, whatever that is. It's just, you can't, and you need to hold yourself accountable. Also, know when to walk away from trades. A lot of people get greedy, and I think greed plays a part in psychology. Um, because it is the way that you're thinking about a trade. Don't get too greedy. Make sure once you set something up, once you plan the trade, you have to trade the plan, okay? So that's one of the most important parts. So you have to do that, and it's only up from here. So make sure that you don't get too greedy and you're not moving your take profit. Once you set a goal for yourself on the day, I tell people to do this every single time they ask me about this. They come to me asking, hey, I'm trading on a $1,000 account. Hey, I'm trading on a $10,000 account. What should I be looking for today? What should I make today? What should I attempt to make? What should my goal be? And what should my stop loss be? And I tell them it's quite simple. If you're trading on a prop firm, and you have a $10,000 account, I'd say make anywhere from $50 to $100 a day. That's even a little bit on the high side. That means you'd pass your phase one in about 8 days, which is still, it's okay. I'd say don't look to try and make $1,000 a day on a $10,000 account. If you can do it, I mean, by all means. But if you want to practice safe and proper risk management and everything, I'd say just target your 0.5 to 1%, take profits, and you'd be good. And then as far as your stop loss, that's really up to you. I'd say think about it as what's your daily loss limit from your prop firm, and if that's $250 or $500, whatever it may be, if it's on a $10,000 account, it should be around $500. Be like, okay, well, if I do $50 stop loss, that means I could lose 10 trades, hypothetically lose 10 trades before my daily loss limits hit. You can set yourself a $50 stop loss, no problem. It's okay. And I'd say you can run it like that. So I hope this video did help for psychology, or just a better way to think about trading. So if it did, just hit that like button, subscribe, and I'll see you guys in the next video. Have a good one.